Ever wondered what's the difference between tax evasion, tax avoidance, and tax planning? These may sound like jargon to some, but they hold real-world implications that affect not just corporations, but individuals as well. Grasping these terms is vital, particularly for those pursuing careers in finance or those already navigating the financial seas. So, whether you're a neophyte or a seasoned pro, a thorough understanding of these terms can be a game changer. In today's video, we'll demystify these terms and understand what they really mean. So, what's tax evasion? Let's slice it down to basics. Tax evasion is, simply put, an illegal activity where an individual or a corporation intentionally avoids paying their rightful tax dues. It's like playing hide and seek with the taxman, but with dire consequences. Imagine, for instance, a business owner who decides not to declare all their income to the tax authorities. They might think they're being clever, cutting down their tax bill, but in reality, they're walking a thin line. That's because tax evasion isn't just frowned upon, it's outright illegal. Here's the thing. Tax laws are complex and sometimes intimidating, but they're there for a reason. They ensure that everyone chips in their fair share to fund public services, infrastructure, and other societal needs. So, while it might be tempting to dodge the taxman, the risks far outweigh the benefits. Remember, tax evasion is a criminal offense and can lead to hefty fines or even imprisonment. Moving on to tax avoidance. It's an intriguing concept, isn't it? Unlike tax evasion, tax avoidance is a legal practice. It involves using the tax regime to one's advantage to reduce the amount of tax that is payable by means that are within the law. Tax avoidance is all about understanding the nuances of the tax code and using it to your benefit. Let's take an example to simplify this. Imagine you've been working hard all year and earned a hefty sum. Now, wouldn't you want to hold on to as much of it as possible? One way to do this is by investing in tax-saving schemes. These investments can reduce your taxable income, therefore reducing the amount of tax you owe. But there's a catch. While tax avoidance is completely legal, it's often frowned upon. Why? Because it can be seen as not paying one's fair share. It's a fine line between smart financial planning and being, well, a bit of a Scrooge. Finally, let's dive into tax planning. It's not just about keeping track of your receipts or knowing the latest tax laws. It's an ongoing process, a strategic move designed to make the most of your financial situation. It's a legal and smart way to minimize your tax liability through the best use of all available allowances, deductions, exclusions, and adjustments. Imagine this. You are planning your investments wisely, not just to maximize returns, but also to gain the most tax benefits. Take, for instance, investing in tax-saving instruments like mutual funds or bonds. These investments not only provide you with potential returns, but also help reduce your taxable income. They are not loopholes or get-rich-quick schemes, but legitimate ways to manage your finances better. Tax planning is about making informed decisions today that can help you save money tomorrow. Remember, it's not about evading tax, but paying your fair share. Effective tax planning can save you a lot of money while keeping you within the legal boundaries. Now that we've covered all three terms, let's summarize what we've learned. We started by defining tax evasion as the illegal non-payment or underpayment of taxes, often involving deceptive practices like misrepresenting income or falsifying deductions. This is a crime, punishable by fines, penalties, and even imprisonment. We then moved on to tax avoidance, which, unlike evasion, is perfectly legal. It involves using the tax law to one's advantage to minimize tax liability. This could involve strategies such as deferring income, claiming permissible deductions, or making investments that offer tax benefits. But remember, there's a thin line between avoidance and evasion, and crossing it can lead to serious consequences. Lastly, we discussed tax planning, which is essentially organizing your financial affairs in such a way as to minimize your tax liability within the boundaries of the law. It's a crucial part of personal financial management, allowing you to make the most of various tax exemptions, deductions, and benefits provided by the government. Understanding these three terms, tax evasion, tax avoidance, and tax planning, is essential. Not only does it help you steer clear of potential legal pitfalls, but it also allows you to effectively manage your finances and make informed decisions. Always remember, it's not just about paying taxes, it's about understanding them too. Stay informed, stay smart.